Hello and welcome to this brand new episode of The Cover, a show where we share a sneak peek of the latest Business Today magazine with all our viewers. I'm Sakshi Batra, and with me on the show I have Mr. Alokesh Bhattacharya, Managing Editor of Business Today magazine. I also have with me Arnab Datta, Assistant Editor of the Business Today magazine, and also joining in with me on this panel I have Ashish Rukhiyar, Senior Associate Editor of the Business Today magazine. Welcome to the show, gentlemen, and great to have you with us. And now to showcase the first glimpse of the magazine, where the cover is dedicated to Ikea, the home furnishing company, the Swedish home furnishing company, which is perhaps making successful inroads into India. Now, we all know how the Bengaluru store opening visuals and thousands of people queuing up on day one were all over the news. So that's going to be the focus to understand, will it be successful long-term player in the home furnishing business in India? And Arnab has written the detailed story and the detailed cover story on that. But let me first start off with Alokesh. Alokesh, help us understand why IKEA, what made you choose this as the fortnight cover story, and what are the other key stories that are covered in this issue?
Right. So, Sakshi, any story that's done on IKEA always generates a lot of reader interest, right? And also the
Yes.
fact that IKEA in recent times, ever since they opened their first large store in Hyderabad a couple of years ago, since then they have been making a lot of moves and opening stores in different parts of the
Yes.
country, in Mumbai, Navi Mumbai, and now in Bangalore. And we hear that there are plans to open up in the Delhi NCR as well. So there is a lot of action happening in that area. And as we all
Mhm.
know, there are homegrown players in India, right? Like Pepper Fry, like
Oh, yes.
Godrej Interio and Zuari and many others who are also in the same space. And then there are those furniture markets all around the country that we all
Oh,
visit.
yes.
IKEA is a furniture giant. So it would be interesting, we thought, to take a look at IKEA's plans and see how our homegrown players are planning to compete, because IKEA has, of
Yeah.
course, deep pockets and a very big brand name.
Absolutely, you're right over there. So let me take it away to Arnab now, who's written this cover story. Arnab, help us understand, about IKEA.
If you look at the largest markets like US and the Germany, they have per capita consumption of furnitures of more than $700 per person. But in
Yes.
India, the per capita consumption of furniture is only $5, which is 400
Hmm.
rupees. So that gives a great headroom for growth for the India market. Secondly, the other markets that IKEA present in are all developed markets and with significant increase in per capita GDP or per capita income. But in India,
Hmm.
the market is growing much faster. Like if you look at because out of the 462 stores, to
Hmm.
277 or more, around 75 of the IKEA stores are present in Western Europe, which is
Right.
growing at a zero pace or probably negative space. They are heading for an
Okay.
inflation, and so is US. But
Hmm.
India as a market is going to grow for the next 20, 30 or how many years we don't know. So that is
Yes.
also a reason why IKEA needs to look at future markets like India.
No, that's absolutely important to understand. But at a time, a lot of questions emerge in our minds that, where social media is abuzz with videos of, say, Banjara market and all these flea markets of furniture, where the cost of making furniture gets lower because of the cost of labor, lower cost of labor in India.
IKEA plans to compete with them by bringing the cost down because they are now currently sourcing 27% of the products that they sell in India. And
Okay.
eventually they want to take it to 50% so that the cost of imports and the import duty they do not have to pay. Right now they
Okay.
don't procure any wooden furniture from India, but very soon they are going to procure. They are like kind of looking for local manufacturers who can partner with them, who become large scale suppliers, and they are looking for
Hmm.
them. The CEO also said. So this way
Okay.
they want to bring the cost down. And on the other
Hmm.
hand, IKEA does an extensive market research which no company does. For example,
Okay.
for the Bangalore store alone, they have done market research for 4 years, and they have physically visited 2,000 homes to understand the needs of the consumer. That is what they do in every city they go into. So that is why the stores that are going to come up in Delhi region, the Noida and the Gurgaon stores, that will take at
Sure.
least 4 years from now. So these are
Yeah.
the strategies that IKEA have taken to beat the competition so that they make the consumer aware of their choices and also offer product that actually consumers need.
Understood. Understood. So, lastly, Arnab, help me understand with what are the kind of investment plans in India that IKEA has? What store expansions can we expect?
Is that
Hmm.
they have already invested more almost 9,300 crores. At least they have raised that money from the parent group through various
Hmm.
avenues. 4,000
Hmm.
crore in equity investment from the parent company, the Inca Group, and more than 5,000 crore through various masala bonds and debentures from the various group companies spread across China, Ireland, and other countries. So
Right.
that they are already ready to invest or already have invested almost 9,000 crore in India, which is significant. If you compare with their size of business right now, they have a
Yeah.
very small presence compared to that, because their total revenue in financial year FY 2021 was only 650 crores.
Sure.
So you compare that, their plans are very big. And if you talk about the store and expansion and physical presence, they are currently looking at. They have already opened stores in large format stores in Navi Mumbai, Bangalore, and Hyderabad, and they
Yeah.
have two relatively smaller format stores in Mumbai, which is 75 to 80,000 square feet, which is still big. But now they are looking at a city like Bangalore for city-centric stores. So that the plan is basically, the initial plan was like that in US. You travel to the outskirts of the
Yes.
city and buy the
Yes.
furniture, bring it home. But in India, that wouldn't work. They have already realized that. So now
Yes.
the plan is they want to go closer to the consumers. That is why they are opening stores inside the city, and also they are aggressively
Got that.
increasing online presence. Like they have already, I think, opened a online marketplace in cities like Ahmedabad and Surat, which are
Right.
nowhere in the horizon if you look at the top 10, 15
True.
markets
True.
right now. So that is the plan. And
Yeah.
if you look at the large format stores, they are also looking at two markets which are very crucial: Noida and Gurgaon. Why Noida and Gurgaon? Because in Delhi,
There's a
of
lot of
course, you can
space.
see that the real estate cost is too high.
Yes.
That would become unviable. So Inca
Absolutely.
Group, the parent company, is setting up two malls, which is the two first malls by these groups, and they will be setting up two large format stores in Noida and Gurgaon. And before that, they were also planning to open warehouses in the Delhi
Yeah.
NCR region. So that is the
Right.
plan.
Right.
Yeah.
Absolutely. So, look forward to reading your extensive story and coverage in this issue. Let me take it around across to Ashish now from furnishing market. Let's go to the stock markets now. And Ashish, you've spoken to a whole host of experts right there to get a sense of what can we really expect from stock markets going forward from here.
The Indian markets, if you just look at the month of July, Sensex and Nifty have gained almost 8%. That's like the best monthly gain in this calendar year. And still we
Hmm.
are saying that there is an unpleasant consensus in the market. So I guess our story couldn't have come at a better time. Because if
Yeah.
you see, most market participants are still cautious, at least on the near-term outlook. They say
Hmm.
that the worst is behind us, the bulk of the corrections have already happened, but still the undertone is still a lot cautious.
Yeah.
Being bearish wouldn't be the right way of calling it, but yeah, cautious is the term that we can use while talking about the near-term outlook. Now,
Sure.
both Sensex and Nifty, if you recall, were till recently were down almost 18%. If you compare
Yes.
them with the all-time highs that they touched in October. Now,
Hmm.
currently they're just down around 6 to 7% from the highs. So bulk of the they have recouped bulk of the losses. But still, if
Yes.
you look at if you speak to these market experts, and for this story we spoke to some of the best well-known market experts, whether they are domestic broking firms, global broking firms, mutual funds, individual investors. They're all
Yeah.
well-known, respected names in the market. And one
Right.
thing that they all had to say was that there are a lot of headwinds currently, and so they say that it's too early to say that the Indian stock markets are out of the woods. The biggest concern is inflation. I mean, you look at the
Hmm.
US, look at Europe, UK, everybody is reeling under inflationary pressure. So inflation is the
Yeah.
single biggest concern which every market expert is saying. I mean,
Okay.
inflation followed by aggressive rate hikes and these rising interest rates would obviously affect demand. There is this recessionary pressure in the Western world, geopolitical issues, crude. So there are a host of concerns, and
Sure.
combination of all these factors have made these experts too cautious, at least in the near term.
Got that.
So to
Got
sum
that.
it up, I mean, they still are bullish over a longer period of time. But if we are talking about the short term or this going ahead this year, 2022, there is still an unpleasant consensus in the market.
I also wanted to touch upon, you've also written extensively on the SME IPOs. Now, that space sounds interesting because so far this year, we've actually not seen many IPOs, hitting the street, at least in the bigger IPOs that we talk about, especially looking at where the LIC IPO, how it really panned out. Most of the big IPOs have actually been staying on the edge just to find out if the waters are still better to actually take a dip in. But SME IPOs, there's been a beeline. Help us understand what really is happening in that space.
Now, SME is a very interesting space. If you see there, if you go by just government data, there are over 98 lakh registered MSMEs. And government, policymakers, exchanges, regulators have been trying to get these SME to the listed space, to the organized segment. So
Hmm.
nearly 10 years back, BSE and NSE had launched their respective SME segments. And since then, there has been a steady and strong growth in the segment. I
Hmm.
mean, if you just look at the numbers, more than 650 SMEs have listed since 2012 when the SME segment was launched. I
Right.
mean, the plan was to launch. The plan was to have a SME segment, something on the lines of the alternative investment market or AIM of London Stock Exchange. So
Hmm.
one can say that we have really created a strong SME segment, and all these, as I said, there have been more than 650 SMEs that have come to the capital markets. The cumulative IPO size of these SMEs have been over 8,000 crore. And if you
Hmm.
just look at 2022, that's the current calendar year, while you rightly
Hmm.
said that if you look at the main board, there has been not much of action in the primary market. And one can say that IPOs have dried up, but there is a completely different picture in the SME space. In the
Right.
current year till date, nearly 50 SMEs have come to the market with their IPOs and have collectively raised around 750 crore. Now, this assumes
Right.
significance because this number is already higher than what was collected over the whole of last year. So, one can
Got
surely say that there is a lot of traction happening in the SME segment. Very seriously looking at this SME space, because listing on the SME space gives them visibility, respect. There is professional management that comes in, there are process and compliances are put in place. So going by the recent trend, one can safely say that the Indian SME space, the listed SME space, is poised for a strong and healthy growth in the years to come.
Okay, hopefully so. Thank you for that update, Ashish. Let me now go across to Alokesh once again, because every quarter there's an extremely super insight that Alokesh shares with all the viewers and readers of Business Today, and that's about the Business Confidence Index. So, help us understand what are the key findings this time around. How is it different from the previous quarter, Alokesh? Are we on a better footing at all?
No, we are not actually.
Okay.
The business confidence has slipped quite a bit actually. If you look at the
Okay.
previous quarter, we had the business confidence index as at 55.2, which was a 7-year high, and this
Okay.
time it has slipped to 51.2. So that's a point fall, which is quite a significant fall.
Hmm.
And the interesting thing is, interest rate hikes has been something that people have been asking for quite some time to curb
Yes.
inflation, right? But there is interest rate hikes are a double-edged sword, right? And you can curb inflation, but the
Oh,
input costs
yes.
go up, your cost of capital goes up, right? So that has obviously dented the
And
confidence
growth could be
of the
compromised for all the businesses as well. I mean, like there's
absolutely.
visibility that goes, yeah. Yeah.
So what happens is that while interest rate costs have gone up, and you can see ever since the repo rates have been increased, in a systematic manner, the inflation has also moderated, right?
Hmm.
When both in June and July, the May and June, that is, the
Yeah.
CPI has moderated and WPI has moderated in June. And we spoke to quite a few top economists like Rajiv Kumar and Omkar Goswami and all, and they were all of the
Sure.
view that the worst is behind us, and that is something that
Okay.
comes through in Ashish's story also, right? On the market, where
Yes.
Shankar Sharma tells us
Absolutely.
that the worst is behind us.
Hmm.
But worst being behind us is not synonymous with best times have come, right?
Yeah.
Worst behind us means that bad times are still here. So
Hmm.
you still have to be cautious, have to be careful. And but our economists, India's top economists, say that the next quarter is going to be good, and there
Okay.
lies the difference, right? So the economists say that next quarter is going to be better. Hopefully, your business sentiment will improve, and this sentiment we measure through a survey that we do of 500 CEOs and CFOs
Hmm.
of
Hmm.
organizations, right? And
Right.
but when we asked the CFOs and the CEOs what they thought of the next quarter, they said no, it's going to be worse. right? So we'll have to see. One interesting point is that the current account deficit, which is basically the difference between the exports and imports, right? That has been widening. So that
Yeah.
is not a very healthy sign.
Mm.
As long as that the gap is less than 1% of your GDP, right? Half a percent or
Mm.
1% of GDP. If that gap is less than that, the balance of payments, then it's fine. But
Okay.
our gap has widened to more than 2.5% of GDP, and that
Hmm.
becomes a matter of concern. Uh,
Hmm. So moving forward, as we are going to be celebrating 75 years of independence next week, there's also something very, very special that Business Today readers will get to read in this issue, and Alokesh will help us, get more insights on it.
the story that we really liked is something that we call the next 25 years, where
Yes.
you've got about 18 top people, executives, to talk to us and tell us about where they think India will be when we reach 100, and what's the
Hmm.
way forward. So we have people like KV Kamath, who's telling us
Hmm.
that it's going to be digital, that is going to be the driver as we move
Yeah.
forward, right?
Yeah.
While we all seem to know that, but coming from Mr. Kamath, of course it makes
Of
a
course.
difference, right? And then there is Keki Mistry, the vice chairman and CEO of HDFC Limited, who says that India will be the growth engine of the world's
Hmm.
economy at that time.
That's
Right?
interesting.
And we have many, many other very powerful voices. We have SN Subramanian, the CEO of L&T, right? Manish Sabharwal, the vice chairman of Team Lease, and we have Nirmal Jain, the chairman of IIFL Group,
Yeah.
and about 14 more.
So thank you so much, Alokesh, Ashish, Arnab, for sharing these insights with all our viewers. I hope everybody will go out there and grab their copies as soon as they can. I'm going to be getting on to reading this one too very, very soon. Thank you so much for being with us. It's been a pleasure speaking to all of you.
If you like the video, do like, comment, share and subscribe.